They're shouting crash in Florida, and they're not wrong. Inventory's up, sales down, insurance is going nuts. But here's what they're not telling you. The pain is concentrated. That's not in all areas, and there's a smarter way to buy new construction with lower risk, lower maintenance, locked-in payments on low mortgages only available in 2021, and insurance, well, it's cheaper than $100 a month. I'll show you where and how and where we're doing it right now. Across Florida, demand in certain submarkets has cooled and selection has risen. That's scary for sellers and leverage for you. The trap is older coastal resales with insurance and repaired landmines, so I'm targeting new construction more inland and in North Florida where wind mitigation warranties and rate buy-downs can still put you, the buyer, back in control. All right, so closings are slower, days on market longer. Translation, you negotiate first, not last. You have to be willing to put an offer on the table. Now, I know, again, with the final quarter of the year, with 2025 and the next 2 years being expected to be a real regrowth of a lot of areas, especially the affordable market, people are looking to clear inventory. You make the offer, put it in writing, get it in front of them, see what they'll take in this final quarter of the year. Also, with insurance realities, coastal resales on older homes, they can get crushed by the premiums alone, and those also have very expensive flood policies. So look at the new builds a little more inland that don't get pressured by that. Again, these are built at 13, 14 feet above sea level, opposed to the old rules that were 2, 3 feet above sea level. And again, why do insurance companies have issue with the older homes? Because flooding is the biggest concern with hurricanes, not even wind. These lower homes have the biggest chance of flooding. And new construction, very, very rare. That's why they're built at that higher ground. So you can take advantage of that. And by doing that, not only for the long-term safety of your investment property, looking long-term with it, you can also have lower premiums. And those lower premiums can directly affect whether you have monthly cash flow or negative monthly cash flow. And today's builders are buying down rates. This does not happen all the time. Take it from a builder where it's not always offered. People wish it was always offered, and there's going to be a time they say, I can't believe I could have gotten in at rates of 2021 in 2025. It just sounds impossible when people don't understand the power of a builder with a good balance sheet that can go to a bank, negotiate large amounts of debts down, and pass it along to their buyer. This is a very incredible way to hedge the market, not have to wait for rates to drop. Who cares what the Fed's doing? You can act now and cover the closing costs, get added upgrades. These are things you can do with builders right now, especially going into the end of 2025, because many of the experts, ITR Economics, John Burns, people that I actually hired to consult for us, are saying 2026 and 2027 are going to be a rebound and a regrowing of the real estate market in the affordable range. So payments matter more than price right now, not only for personal homeowners, but investors to get a cash flow and be able to buy more properties. Those buy downs are more valuable than ever. They won't always be here. Take advantage of the sweeteners while it's still here. All right, but let's talk where it's wobbly. Luxury and coastal show the biggest cracks. Now, these are areas that are beautiful. Again, some of the most expensive and beautiful, most valuable property in the world is luxury and coastal. Doesn't mean it doesn't have high insurance. Doesn't mean that it doesn't have some of the highest swings in prices. I've seen it here, especially in South Florida, where there was that huge run up through the pandemic. Now the cracks are showing. There's been quite a drop. And also, there's a huge issue with certain older luxury homes that are coastal or within a half mile of the beach getting that insurance. And sometimes, like I've told you in some other videos, the insurance premiums can literally be 5 to 7 times more on a property that's older, like in the 1950s or 60s, compared to a new construction home built 2004 or newer. So that's really important because that's going to start to affect payments, what people can get to actually rent the property, and all the insurance lineups. So we're going to continue to see that weakening in the luxury and coastal markets because these properties are normally still being financed. And if they're being financed, that higher interest rate is still eating into that larger payment, and people are staying on the sidelines. So let's break it down further. 2 identical buyers. Buyer A grabs a 1990 coastal resale, old roof, assessments, flood drama. Buyer B buys a 2025 Southern Impressions home, built inland, 210 structural warranty, WinMint certification credits, energy efficient systems, and a great rate buy down, getting you a rate long-term from 2021. Same budget, wildly different stress levels. And let's look at some false hope. Okay, coast always bounces back. That is not a plan. When affordability is stretched and sales are thin, prices don't levitate. Don't guess from the bottom. Fix the payments and the risk. That's something that a lot of people are not looking to do right now. And they're also refusing to look at the older homes' true insurance premiums. I've heard the nightmares where people are buying a property of their dreams close to the beach, on the beach, but it's an older home, and they don't actually look until they're too far along that the insurance premiums, again, are 5 to 7 to 10 times more than they expected because of that low-lying situation, something you definitely want to avoid. So for you agents out there, pull the insurance quotes before showings. You got to highlight what they're going to end up getting charged because you might find them that deal, or you think that deal, and if you don't understand the insurance costs, that could blow it out of the water, where a new construction that might cost a little more is so much more affordable in insurance, it actually turns out better. And remember, lead with new build spec sheets and buy down math on call one. If you're not telling them about the difference in rates, I mean, we're talking 3+% on their mortgages long term. That's a huge difference in their monthly payment for the long term. So you got to get into it. Couple that with new builds and warranties, they're able to have a better opportunity to avoid maintenance and repairs. And that, again, is a huge cost for young families and for investors in that first 1 to 3 years, which is crucial to getting the property and the investment set for the long term. And coach your sellers. You're competing with payments, not just prices. If you're working with a builder, they better be offering good incentives. They better be offering fair pricing. And remember, they will take offers. I'm a builder myself. Make offers. See what they're going to do. Final quarter of the year, especially when we're about to go into what's an expected return of growth, they are looking to clear inventory, make offers. So some of the markets that we're targeting, Jacksonville, the MSA is cooling, but it gives you negotiation room for new builds. So make offers. And again, we're not seeing a plummet in prices in the workforce affordable housing. Now you go to the emotional markets, you're looking to find a house that you want to live in. You could probably make a really good low offer to get that, but you're not going to still cash flow those properties. So investors are not buying there. You got to look in the more affordable range. Palm Coast, it's good growth corridor with fresh inventory, and both Jacksonville, Palm Coast, and Ocala still have market trends of population growth. This is absolutely key. We know we're behind on needed housing. I've gone through the stats in other videos. You need to look at that and see where it's going. Again, Ocala is a great central location, some of the highest income per family per the lowest average price of a home. You can't ignore that active new construction. And the rental draw, Ocala, you're looking about 18 days to fill a vacancy. I hear all these rumors that you can't fill a property. I always point people to Ocala if that's their concern. It's an average of 18 days on the market if it's priced right and marketed right. So remember, coastal can have volatility, inland and northeast, especially of Florida. There's more incentive, there's more safety and more stability. So don't let that be, you do not take that for granted, something you have to look for. And as Florida rebounds, it's going to be because payments make sense. That's what this is all about. New construction also coupled with wind mitigation warranties and those incentives are what buy down the rates. It's what builders are doing, and they won't do forever. That gets you back in line with what payments were 5 years ago. That puts affordability forward today without a lot of gambling on old roofs or special assessments. Again, new versus old, I've done thousands of each, and my experience is the new construction helps you sleep at night, and there are less surprises. So you want my Florida new construction playbook with current incentives, sample buy-down math, and an insurance checklist? Tap the link or visit southernimpressionhomes.com, and I'll send you the models for Jacksonville, Palm Coast, Ocala, the markets that are still making waves and producing returns for the qualified smart investor.